I apologize for the delay. We just solved the Wall Street crisis here before we started on the second crisis for the day. Thank you for being here, and we're going to talk about healthcare payment system through the private insurance companies, whether group or independent policies, and this is a segment of the payment industry through which most members of Congress and our staffs receive their care. As we are trying to lay the groundwork for possible health care reform or health care payment reforms in the years ahead, it's important that we examine this very large sector of our payment system. As we do see from the events of this past week, the case for reasonable regulation, not relying totally on self-regulation, or letting people just fend for themselves in a complex market, doesn't seem to be a very good solution to follow. Right now, the payment market is failing some 40-odd million uninsured for a variety of reasons. The people who are uninsured are not necessarily there because they don't want insurance. Many of them can't afford it. Many of them can't find it because pre-existing conditions. And we'll hear from witnesses this morning about how to deal with that problem. Even those of us who enjoy a payment plan through large employers face problems. Premiums are increasing faster than wages. The employers are shifting some of those costs onto the beneficiaries through higher deductibles and co-payments. And we'll hear today about issues in dealing with those problems. So I want to welcome the witnesses, and I look forward to the witnesses informing us as both their definition of the problems we face and how they suggest that we deal with it. Mr. Camp?
Well, thank you, Mr. Chairman, and thank you for convening this hearing on the private health insurance market. And regardless of what happens in November, comprehensive health care reform should be near the top of our to-do list in 2009. And I strongly believe that any plan for reforming our nation's health care system must include conversations about how to reform the tax code so that every American, not just those who have employer-sponsored health insurance, can benefit. And we must also look for ways to better utilize the private health insurance market to expand coverage to the millions of uninsured Americans. In doing so, we need to ensure that millions of Americans who are eligible for Medicaid and S-CHIP but are not yet enrolled get the coverage to which they are entitled. Every uninsured person in this country shares one common characteristic, and that is they receive no assistance under the federal tax code to help them purchase health insurance in the individual market. We should use the power of the tax code to create personal health care just as the tax code created employer-sponsored health care. By equalizing the tax treatment, we can give the millions of Americans in the individual market the ability to purchase quality health insurance. And I hope that my support for equalizing the tax code will not be misconstrued as a desire to move everyone into the private market. That is certainly not my intention. If you're lucky enough to have employer-sponsored insurance, then you should be able to keep it. And certainly there are benefits of employer-sponsored insurance, such as effective risk pooling and administrative savings, which I know we'll hear about from our witnesses today. However, employer-sponsored insurance also tends to shield consumers from the full cost of the care, which encourages overconsumption of health care services. This, in turn, contributes to rapid spending growth and higher health care costs for everyone. For those people who have no other choice but to purchase insurance in the individual market, we ought to do something that will allow them to choose the health insurance that best meets their needs while receiving financial assistance through the tax code. The generosity of the American taxpayer should not go to employers alone. It should apply to individuals, small businesses, and large corporations alike. But in order to make this work, we must study the shortcomings of the private health insurance market, and I trust we'll hear about some of those today. I welcome the opportunity to discuss what reforms might be needed to make private health insurance more affordable and more accessible to the uninsured. Even if we're not comfortable with every suggestion that is put forward, we owe it to our constituents to have an open discussion about reforming the system so that everyone has equal, affordable access to the best health care in the world. And thank you, Mr. Chairman. I yield back.
This morning, we'll hear from a distinguished panel, Dr. Karen Davis, who's president of the Commonwealth Fund, whose work in the doing research and funding research and in the delivery of medical care is well known. From my part of the world, Mr. Bruce Bedekin, who is chairman and CEO of Blue Shield of California, and has been a proponent for many years for universal coverage for all Americans. Dr. Roger Feldman, who is the Blue Cross Professor of Health Insurance at the University of Minnesota in Minneapolis, and Ms. Mila Kaufman, who is the Superintendent of Insurance in the Maine, from the state of Maine, the Maine Bureau of Insurance from Augusta. We will welcome you and look forward to your enlightening us in the order that I mentioned your names. We're going to ask you to try to hew to the 5-minute warning, and that'll give members of the committee an opportunity to let you expand on your testimony and your ideas during the periods of inquiry. Karen, would you like to proceed?
Thank you, Mr. Chairman, Mr. Camp, and members of the committee. Historically, the U.S. healthcare financing system has been based on shared financial responsibility among employers, government, and households. Unfortunately, the rise in healthcare costs this decade has coincided with an erosion in health insurance coverage and with rising economic insecurity for American families, caused in part by the shifting of greater financial responsibility for coverage and health care directly to families. Americans' mixed system of private and public health coverage has its strengths and it's worth preserving. However, the trend toward increasing the individual's responsibility for insurance and health care is shifting an unacceptable risk onto families. As a consequence, the number of Americans without adequate protection from healthcare expenses has been on the rise. As the chairman noted, the number of uninsured has increased 20% this decade, now at 26 million. The number of underinsured people has jumped 60% over the last 5 years, an estimated 25 million today. Low-income adults are hardest hit. Private markets are simply not working for low-income adults. The numbers of Americans who face difficulty paying medical bills and have accumulated medical debt have also risen substantially. A recent Commonwealth Fund study found that there are 79 million Americans who have difficulty paying medical bills or accumulated medical debt, and many of those were insured at the time those expenses were incurred. Managed care plans have increased patient cost sharing or limited benefits. There are no minimum standards on benefits to prevent people from being underinsured. Nearly all private insurance in the group market is now some form of managed care. And while nonprofit integrated delivery systems often have superior performance on quality and have been among the leaders in adopting electronic information systems, many other managed care plans do little more than provide discounted fee-for-service plans. Coverage for employees of small business is particularly troubling. It's eroding in terms of the proportion of firms that are offering any health benefits. It's eroding in the quality of those benefits. The rise in deductibles, especially in small firms, shifts risk to patients, and those higher deductibles are particularly a burden for the sickest Americans. Individual health plans represent the weakest part of the health insurance market. Such plans are characterized by high administrative costs, poor benefits, and in most states, they exclude poor health risk. Fortunately, the public programs, Medicare, Medicaid, and the state children's health insurance program buffer some of the risk to families by covering the elderly, many of the disabled, low-income children, and some very low-income adults. Ensuring stable, affordable health insurance coverage for all Americans will require a significant increase in the role of government to set the rules for the operation of private markets and reverse the trend towards shifting greater financial risk to families who are unable to bear that risk. Steps should include providing health insurance premium assistance to low-income and moderate-income families, strengthening, not weakening, employer coverage, setting national rules for the operation of individual health insurance markets, or creating a national insurance connector, such as the one implemented by Massachusetts. I would also suggest offering a public plan modeled on Medicare to small businesses and individuals, which our studies estimate would lower premiums by 30% and increase the stability of insurance coverage. Building on Medicare, Medicaid, and SCHIP to cover older adults, the disabled who are in the 2-year waiting period for Medicare, and low-income adults as well as children. Private insurance markets do not serve these populations well. Finally, insurance reforms need to be part of a comprehensive strategy to bring about a high-performance healthcare system that achieves better access, improved quality, and greater efficiency. Thank you.
Thank you. Mr. Badaikan?
Thank you. Mr. Chairman and members of the subcommittee, thank you for this opportunity to testify about the health insurance market. I am Bruce Bodakon, Chairman and CEO of Blue Shield of California, a not-for-profit health plan serving 3.4 million Californians. While more than 200 million Americans have insurance coverage that gives them access to some of the best medical care in the world, our system has gaping holes, nearly 47 million uninsured, rapidly rising costs, and uneven quality. In my view, the vast numbers of uninsured are a root cause of the major problems afflicting the private health insurance market. Only by extending coverage to all Americans can we solve those problems. Let's start with an overview of what is and what is not working in today's market, which is actually 3 markets, and it's already been mentioned: large group, small group, and individual. The large group market works pretty well. The sizable number of members in each group assures a balanced risk of both healthy and less healthy enrollees. In this market, health insurance works as it's supposed to. The heavy medical expenses of a few are spread across a broad population that also includes lots of healthy people with minimal expense. The result is a reasonable per enrollee health insurance cost. The small group market works quite differently and not as well. Under federal law, insurers are prohibited from turning down any small business that applies for coverage based on the health status of their employees. For obvious reasons, employer coverage is more valuable for older and sicker employees who may not be able to obtain coverage in the individual market. Since employers are not required to offer coverage and employees are not required to buy it, those who need it most are disproportionately represented in the small group insurance pool. As a result, premiums are much higher than in the large group market, and if every small business provided coverage, of course, that very same overall risk would improve and costs would thereby improve as well. Balanced risk is an even bigger concern for the individual market. Since there's no mandate to purchase insurance which would guarantee a broad risk pool, California and more than 40 other states which allow insurers to deny coverage or impose limits on the coverage offered to people with pre-existing health conditions. I can assure you that rejecting an applicant for coverage is not something I or any of my colleagues are comfortable with. But in a voluntary market in which people can go in when they're sick and go out when they're not, medical underwriting is the only way to ensure a balanced risk pool. Without it, premiums would even be higher, spiraling upward, depriving even more people of coverage. The only way to put the small group and individual markets on solid footing is through a universal coverage plan covering all Americans, certainly covering all Californians. Since 2002, Blue Shield has supported a universal coverage plan with these basic elements. First, require every individual to have coverage and every business to contribute to their employees' coverage. Provide subsidies to low-income purchasers. Enroll everyone eligible for Medicare and S-CHIP programs. And require insurers to accept all applicants regardless of health status. The benefits of this approach, which is often referred to as shared responsibility, are it builds off what works. It doesn't interfere with the current large group market, which functions well, and it would allow the vast majority of insured Americans to keep what they have today. It spreads the cost of achieving universal coverage broadly. And last but most important, it gets everyone covered. This will enable the small group and individual markets to function the way we expect insurance markets to function, by spreading risk across a broad population. While we don't have time today to explore the other benefits of universal coverage, I also believe that having everyone in the system is essential to reducing costs and improving the quality of care in the long term. For Blue Shield, it's an imperative based on the mission of our company, but it's also the right and economic thing to do to solve the issue of the uninsured. Again, thank you for inviting me to testify today. Blue Shield of California is eager to work with you on solutions to the serious problems facing our current health insurance system.
Thank you. Dr. Feldman?
Mr. Chairman and members of the subcommittee, it's my pleasure to appear before you today to discuss the private health insurance market in the United States. As you noted in the advisory for this hearing, most people under 65 obtain their health insurance through the employment of a family member. Employer-sponsored insurance, or ESI, has many advantages, but it also enjoys a tax subsidy that costs over $200 billion per year. Today, I'll review the tax treatment of health insurance premiums and the history of the tax exemption for ESI, explain what's good about ESI and bad about the tax subsidy, and conclude that ESI can and should stand on its own without special tax assistance. The tax system touches health insurance premiums in 4 ways. Premiums paid by employers are exempt from taxation. In addition, some employees can pay their share of the premium with pre-tax dollars. Self-employed workers enjoy a partial tax exemption. They can deduct premiums from income taxes, but not from their self-employment tax. And finally, individuals who itemize federal income taxes can deduct premiums and medical expenses that exceed 7.5% of their adjusted gross income. The tax subsidy for ESI arose almost by accident. During the Second World War, employers needed more workers, but wages were controlled. Offering ESI was a way to attract workers. In 1943, a tax court ruled that employers could provide health insurance without violating the wage controls. And in 1954, the IRS code made the tax exemption permanent. The percentage of Americans covered by ESI jumped dramatically, but some of that occurred by buying out or crowding out existing individual insurance coverage. ESI has many advantages. It's available to everyone who qualifies, usually by working more than a minimum number of hours. No one is turned down for coverage. It protects people from premium increases due to changes in their own health risk, and it has low administrative cost compared with individual insurance. This graph shows dramatically that the administrative cost of health insurance decreases as the size of the covered group increases. Large employers with more than 10,000 workers have by far the lowest administrative cost. While ESI has many advantages, the tax subsidy that supports it is expensive. It distorts the choice of where people work. It encourages people to purchase insurance policies that are too generous, which subsidizes the purchase of too much medical care, and the subsidy is grossly unfair. In 2006, the tax subsidy cost over $200 billion. The largest part of the subsidy came from the federal income tax exemption, but the exemption from Social Security and Medicare taxes was also significant. The tax subsidy was worth $1,753 for one person and $3,825 for a family. This will affect where people work. Once people take a job with ESI, they can be locked into it. The subsidy reduces the number of people who go into business for themselves, and unequal tax treatment for the self-employed reduces entrepreneurial survival. The tax subsidy encourages people to buy more generous coverage, which leads to more medical spending. Free care has some benefits, but the RAND health insurance experiment found that it had little or no measurable effect on health status for the average adult. The last issue here is tax fairness. Families earning more than $100,000 per year, who comprise 14% of families in the United States, have 26.7% of the benefit of the tax exemption. On the other hand, families earning less than $50,000, who comprise the majority of all families in the United States, have only 28.4% of the tax advantage. In summary, any discussion of health care reform should include a close look at the current tax treatment of health insurance premiums. ESI has many advantages, but these advantages are supported by an inefficient and unfair tax subsidy. Health economists agree virtually unanimously with these conclusions. I believe that ESI can and should stand on its own without special tax assistance, and if a tax subsidy is offered to ESI, it should be extended equally to the self-employed and to people who buy insurance that is not related to work. Thank you for letting me share these comments with you.
Thank you, Dr. Feldman. Ms. Kaufman?
Good morning.
Good morning.
I'm the Superintendent of Insurance in Maine. My agency serves and protects the public through regulation and oversight of the insurance industry. It is my job to ensure that insurance companies keep their promises. We do that through vigilant financial oversight and licensing, examinations of insurers' activities, and our review and approval of premiums and insurance products. Prior to my appointment, I was an associate research professor at Georgetown University, where I studied health insurance markets across the nation. Mr. Chairman, I thank you and the committee for your leadership and willingness to examine the private individual health insurance market and its problems. It is both an honor and a privilege to be here today. I believe it would be optimal for us to address the healthcare crisis in America in its entirety, and for the federal government to ensure that all Americans have access to affordable, adequate, and secure health coverage. Maine has been at the forefront of reforms, developing innovative initiatives to help finance medical care. Governor Baldacci has been a leader in establishing meaningful new health coverage options for individuals, coverage that actually works for people who are sick. Today, I will focus on the individual health insurance market. In most states, it is inaccessible, unaffordable, and inadequate. It is not a free market where purchasers have meaningful options. A free market assumes that anyone and everyone who wants to buy a product can choose among sellers competing for their business. Insurance companies do not, I repeat, they do not compete to insure sick people. An insurance company's success depends on its ability to minimize its risk. This provides incentives to cherry-pick healthy people and limit the number of unhealthy people covered. It creates an individual market which many Americans cannot access because they have or had a medical condition. Even minor conditions like an allergy could be the basis for not selling you a policy. In most states, insurers are allowed to charge higher rates for people with medical conditions. Assuming you're not rejected and can afford the higher rate, the insurer may decide not to cover your existing condition, ever. The individual market is not truly a free market. A free market assumes that the consumer has the information needed to make an informed decision, and what you bargain and pay for you actually get. In reality, full contracts are not available prior to enrollment, summaries may be misleading, and conflicting and vague contract language makes it difficult to determine how medical care is covered. Furthermore, insurers can change benefits after you enroll. Your drug benefit can be reduced, and you're still paying the same premium. In addition, there are adequacy problems. For example, Mary, paying more than $500 a month in 2005, believed she was protected. Mary was diagnosed with cancer. Each chemotherapy injection was nearly $5,500. Her policy had a maximum daily benefit of $1,500 for both chemo and radiation. Affordability is a problem also. Some argue that coverage would be cheaper without guaranteed issue and adjusted community rating requirements. However, states without these have much higher rates of uninsured. Texas, New Mexico, Oklahoma, for example, states without these consumer protections, 1 in 5 people are uninsured compared to 1 in 10 in Maine. For the last 20-some years, some have looked at high-risk pools to address the cost. In reality, many have had significant funding problems, high premiums, waiting lists, inadequate benefits, exclusions for existing medical needs, and high out-of-pocket obligations. Although 34 states have these pools, less than 200,000 people nationwide are enrolled. Many factors contribute to the price of insurance: the cost of medical care, administrative costs, and profits. In recent years, all three have increased. Profits have been very healthy. Nationally, major health insurers reported combined profits of $12.6 billion last year. While American families struggled and made sacrifices to stay insured, paying double-digit premium increases, it was reported that the former CEO of a large insurance company received a bonus of $1.6 billion worth of stock options, in addition to salary. In conclusion, all aspects of the individual market should fully be examined and better understood before significant coverage expansion efforts of this market are undertaken. I thank you for your time.
Thank you. I want to thank all the witnesses. I guess I just make a couple of comments, and perhaps the witnesses would care to comment on my comments. Bruce, I agree with you. You and I have talked often that if we allow medical underwriting, we can't have an individual market that will serve individuals very well, so that if you followed Dr. Feldman's advice and gave all of us a voucher or a tax deduction that we could go shopping, unless we really change the way that individuals receive their medical insurance, they'd have problems. I'm concerned that this idea of doing away with the present tax structure, it would do nothing to change what employers do. I think a survey recently showed that less than 4% of employers said they would change their plans if the plans were not deductible by the employee. The employer gets to deduct it anyway. One of the unintended consequences in the initial president's plan is that for very low-income people, their Social Security benefits would be reduced by about a third because the new deduction given to them, in a sense, reduces the amount of salary on which they pay Social Security taxes. And if it's a $12,000 deduction, you're making $30,000 a year, it cuts into your Social Security benefits pretty severely. I guess that could be corrected with a tax credit rather than a deduction, but there are serious problems there. The other issue is that we do get $200 billion in payments now out of the system, for better or for worse. And if we're going to spend $700 billion to bail out Wall Street, I don't know where we get that $200 billion out of the employers without somebody up here on this committee saying tax. And that's a very unpopular word on this committee. So that I see some structural problems on getting there. Further, I think that programs that rely on consumer-driven plans tend to impact most heavily on low income. Those of us with generously paid, taxpayer-paid salaries can afford to shop, can afford several thousands of dollars of co-pays under our generous benefits that we get. But people closer to a couple times the poverty level don't have that option. And I think most studies, even Rand study back in the 80s showed that when faced with higher deductibles or co-pays, people forego needed medical care and needed prescriptions. And I don't think we want to endorse plans that would drive people away. Secondly, just a comment on the consumer-driven plans. People have suggested more transparency in pricing. Many physicians have suggested that this puts the purchaser in the business of becoming a primary care doctor. It isn't a question of deciding how much a test costs, it's what test should you buy. And as Mr. Bedekin and I have discussed in the past, we want to expand the number of codes, and the number of types of tests have expanded dramatically, and it would be beyond most of us without medical training. It would be beyond our comprehension to decide what kind of a test we ought to buy. And then you get into the question, for example, if somebody decides they want to go to the low-cost hospital, but the low-cost surgeon they find can't practice at the low-cost hospital. So we have an interrelation between the providers of medical care, and just starting to price this on the internet could cause some problems that I don't think we're ready to deal with yet, and could drive down the quality of our care, which is driven pretty much by our primary care doctor or whomever leads the direction of our medical care. So while I'm a great believer in shopping for the best price, I do find that in some of those areas we would have some problems. And I guess I would summarize it by suggesting that all of the witnesses have brought forth some good suggestions on how we can improve what we're doing. If we're going to if the underlying goal is to first take care of the 46 or 50 or 80 million people who are or underinsured, my instinct is to leave the major plans in place, recognizing that over the longer run, and by that I would suggest 10 years, they will change. But I just could end these observations by suggesting that if anybody in this room could imagine a worse political situation than to have the Secretary of Health and Human Services announce that their health insurance plan, all 100 and 200 million Americans who have health insurance, would end next January 1st, and that Pete Stark was writing a plan which they would receive in the mail, I can conceive of no one item that would be more apt to cause a revolution in this country against people who would just be afraid of what Washington would be doing. So I think that states like Maine, Massachusetts, I wish California had been able to join them, Hawaii, who are moving toward plans to ensure coverage, are moving us gradually there. And I think anything we can do here to help it is important, and I appreciate all of your contributions in terms of suggestions of how we can facilitate that plan. Unless there's anybody who has a burning desire to comment on that, I'd recognize Mr. Camp for his inquiries.
Thank you. Thank you all for being here. And Dr. Feldman, you state that employer-sponsored insurance can and should stand on its own without special tax assistance. And what effect would eliminating the employer exclusion from employees' income of health benefits have on the number of employers offering health benefits?
Some small firms would drop their health insurance coverage. A study by John Gruber and Michael Letow at the Massachusetts Institute of Technology suggests that the percentage of small firms offering health insurance would fall from about 73% to 60%. Gene Abraham from the Council of Economic Advisors and I predict that about 8.4 million workers and their dependents would lose their ESI coverage. Depending on how a subsidy for individual coverage was structured, however, we predict that about 90% of the workers who are dropped would take up individual coverage.
And do employers have any incentives to offer health benefits, such as retaining quality workers or obviously having healthy workers?
Yes, they do, Mr. Congressman. The list of advantages of ESI that I presented is only a partial list due to time constraints. One of the strong advantages that employers have from offering ESI is that it improves the productivity of their workforce. Some studies have estimated that every dollar invested in employee wellness programs through health insurance can yield between $2 and $3 of productivity savings. Fewer workers are absent, and those who come to work are in better health and are more productive.
This committee has heard estimates of the number of underinsured in America. Are there any Americans who are overinsured because of incentives the tax code provides to overpurchase health insurance or overinsure?
I'll make a controversial statement, but one that I believe in. I think almost all workers who have ESI are overinsured, and that represents about 157 million individuals. The reason that they're overinsured is because the tax subsidy encourages them to buy policies that are more generous than they otherwise would buy. One authoritative study suggested that the increase in insurance purchase raises cost by about 30%.
A recent analysis of Senator John Edwards' health care plan by the Lewin Group found that imposing a mandate on employers to offer health care benefits or pay a tax would result in 52 million Americans losing their employer-sponsored health coverage. Do you believe a play or pay mandate is a good idea?
Well, I'm not going to respond directly to the Lewin results because I don't know how much credibility their particular estimate has. But I believe three things about a play or pay mandate. Number one, it's a tax on labor, and not a very particularly transparent tax either. Number two, some employers would drop ESI coverage. They would find it would be more advantageous to pay the tax rather than continuing to offer ESI. And number three, some low-income workers would lose their jobs.
All right. Ms. Kaufman, when Maine's health program went into effect, it was to cover all 128,000 uninsured in Maine, but we're finding that fewer than 4,000 have been enrolled in the new program, and in fact, the program has closed, I understand. What would you attribute to this inability to be more successful in reaching the uninsured?
Thank you for your question. The Dirigo Choice, which is a bridge program that helps people who don't qualify for public insurance like Medicaid and can't afford private coverage because it's too expensive. Through Dirigo Choice, small businesses and self-employed people and others could access private coverage that is negotiated for by the state for them. There have been over 23,000 people who've been served by the program. The challenge, of course, is money, is financial. It's how to pay for the program. You're absolutely correct that currently new enrollment is limited, and it's mostly because of the financial challenges that the program faces. And I welcome an opportunity to work with you to figure out a way to get to help us and other states to infuse more dollars into these innovative programs.
Thank you. I see my time's expired. Thank you, Mr. Chairman.
Mr. Doggett, would you like to inquire?
Thank you for your testimony. Dr. Davis, you may be familiar with a report the National Women's Law Center is releasing today that shows that the overwhelming majority of these private health plans don't include maternity coverage, or if they do, it is in a form of a supplemental rider that has a long waiting period and is prohibitively expensive. I recently received communication from a realtor in Austin who said, "I'm considering not having a baby because I'm concerned that as a self-employed person, I will have out-of-pocket expenses exceeding $10,000. I have health insurance, but it doesn't cover maternity. I'm a college-educated person, but I'm afraid of the health care cost in this country." How can insurers in the individual insurance market claim to meet the needs of women if maternity coverage is so difficult to get and is so inadequate?
I think you've just pointed to one of the major differences between employer coverage and coverage in the individual market. When people get employer coverage, they get it by virtue of getting a job or being the spouse of a worker, and it would cover maternity care on the same basis as other services, perhaps even lower cost sharing for prenatal care. But as you point out, if you're buying coverage in the individual market, and as Mr. Badakin stressed, the insurers are concerned that you're only buying coverage because you expect to be pregnant, expect to use the services. So as a result, as you stress, they either don't cover maternity benefits at all, or they charge very high rates for that coverage. I think we all know that investment in prenatal care has high payoff in terms of fewer low birth weight babies, fewer premature babies. A number of years ago, the Institute of Medicine estimated that every dollar spent on prenatal care saved $3 because of having healthier babies. So I think that this is exactly the kind of benefit that one would be very concerned that one would lose if one were to shift more people into the individual market.
Let me ask you another question. Ms. Kaufman may have some observations on this too. There are actually people that sit on this side of the dais on this committee who advocate a point of view that boils down to the fact that if you just charge high enough premiums on these high-cost policies with big deductibles to individuals, they'll make more rational health care choices. I received another communication from a woman in Austin who consults with individuals and with corporations on how to cut their energy costs by being more energy efficient. And she says, "I've been self-employed for 27 years. For 10 of those years, I've had no health insurance due to the cost. Thankfully, I'm healthy and fit at 50 plus. I now have a catastrophic health insurance policy. It covers nothing unless I'm hit by a train. There's a $5,000 deductible and so much mumbo-jumbo on who pays for what it would take a team of lawyers to figure out. So I avoid doctors, checkups, testing, and take the best care of myself as possible and pray that nothing unforeseen happens." Do you find that with these high-cost private policies, like Brenda Cross has, the woman who wrote me there in Austin, that the nature of those policies affect the health care decisions that consumers are making?
You're absolutely right that those who are in high deductible health plans are very dissatisfied with the coverage. Only about a third are satisfied with their coverage. Most would not recommend the plan to a family member or friend. Most would get out of those plans if they had any other alternatives available to them. Those that are in the high deductible plans, whether they're with a savings account or without a savings account, more likely to report not getting needed care. They are much more likely to report difficulty with medical bills, with medical debt. It's all part of this shifting more and more financial risks to families. When it's covered by the plan, it's covered by the premium, it's shared between the employer and the worker. When it's in the deductible, only the worker pays for those deductible expenses. Some are fortunate enough to have employers making a contribution to a health savings account, but over a third have no contribution from their employers, and others have very modest amounts of money in their account. They are simply not able to handle the financial risk that this push toward skimpier and skippier policies has created.
Ms. Kaufman, do you have experience with that?
A couple of thoughts. First of all, I think the higher costs, both for premiums and out-of-pocket costs, whether it's co-insurance or co-pays or other out-of-pocket, it's like a silent disease that's killing off the middle class.
Right.
And we need help to stabilize, to keep families healthy, to keep workers at work. We need to help people financially, not take away what they have now. Many families are struggling. We know that the leading cause of personal bankruptcy in America is an illness, and we know that the majority of those filers had health insurance. It just wasn't enough to cover them. While we are engaged in all this talk about perhaps some being overinsured and buying too much, we live in the wealthiest nation in the world, and arguably we provide the least for people who need it the most. We let 18,000 people die each year, preventable deaths, because they have no coverage. And more people are struggling to pay their bills to maintain their health coverage. I would argue that we need more help, more financial resources, more real solutions to address the cost drivers to make sure everyone gets coverage and it's fair and just.
Thank you for helping us lay the groundwork for real reform next year with the new president.
Mr. Johnson, would you like to inquire?
Thank you, Mr. Chairman. Mr. Bodakin, as part of your health reform plan, you advocated expanding Medicare and Medicaid. And in an interview you gave to the San Francisco Gate, you talked about how Medicare and Medicaid are significantly underfunding hospitals and physicians. You know, Medicare's slated to take another cut in physician payments by about 40% over the next decade. In your state, 50% of the doctors won't participate in Medicaid, according to our information, because of low reimbursement. I think, and I'd like to hear what you think about fixing the problems in Medicare and Medicaid, which are both underfunded and running out of money, before we talk about expanding eligibility. Could you comment on that?
When I was talking about the expansion of Medicare and Medicaid, it was less about expansion of eligibility and much more about getting the underlying reimbursement to physicians and hospitals to a level that is adequate so that they don't leave the system. What's happening with all of the public programs, including SCHIP, is that because of the levels of reimbursement, Medicaid is the lowest, and California in particular is one of the lowest states in terms of Medi-Cal payments to physicians, and for that matter, hospitals, but Medicare as well. They, in fact, because they're underfunded, actually, to make their bottom lines, have to charge the private sector, essentially sign contracts with companies like mine at a much higher level, which means that all of the private coverage is that much more expensive. We think it's about 15% more expensive because of what we call the cost shift from the underfunding of Medicare and Medicaid to the private sector.
Yeah, but where would you suggest we get the funds from?
Well, I mean, it seems to me, and one of the things that we've said from the day we launched the proposal for universal coverage is that, frankly, we really do believe that it's not a matter of whether tax is a dirty word or not. It's not a matter of simply taking the current revenues and redistributing them and somehow covering 48 million more people. It's going to cost more money. And we had thoughts about that at the time. We still have those thoughts. But the reality is we've got 48 million people uninsured nationally, 7 million in California uninsured. To get to levels of reasonable coverage and reasonable reimbursement to providers, I think it's going to take more money. And I, whether that's, whether we call it fees or whether we call it participation to a greater extent on part of the enrollee, there's lots of ways to do it. But frankly, I think it's naive to think that we can meet the unmet needs of that many people and have it all come out as a zero-sum game.
Well, we may have to start charging people more. I think we can agree that making individual health insurance market more viable for more Americans will help decrease the number of uninsured in the country. Mr. Bodekin, you said that an individual mandate would be one way to achieve that. What about equalizing the tax treatment for health benefits? For example, if the tax code treated health benefits that individuals purchased on their own the same way as those benefits purchased through the employer-sponsored system, wouldn't that affect the individual insurance market? And I'd appreciate both of you answering that if you could.
I think actually there is an inherent unfairness in the individual market versus the group market in terms of the tax treatment, and I think making those, changing that unfairness, I think, is an appropriate thing to do. The only thing I would caution is that the adjustment of the underlying tax treatments, particularly in the employer system, I think getting it equal in the individual system is fine. To remove it from the employer system and the individual system, I think has much more severe consequences in terms of actually increasing the problems of uninsurance and underinsurance. So I don't personally think in the near term that doing that is really a solution. But insofar as we have a tax code that says if I have a job and my employer gets a deduction and I get a deduction, if I'm individually employed, it seems to me that same deduction should apply.
Dr. Feldman, would you care to respond?
I think extending the tax subsidy to individual insurance would be the most significant tax reform that you could consider at this point. That would allow you to consider more significant longer-term reforms that members of this panel and of your committee all support. You could require that insurers who accept the tax credit offer guaranteed renewability and guaranteed issue for all comers for their policies. You could also require that they offer several standardized packages, some of them including maternity benefits. I would recommend that you allow insurers to designate between 1% and 2% of their applicants as uninsurable, because some folks truly can't be insured by a private market. Those people would go into a high-risk pool subsidized by premiums levied on all the normal policies. But all of these things are contingent upon reforming the tax treatment of health insurance so as to create a level playing field.
Thank you very much for your testimony, Mr. Speaker. My time's expired.
That's all right. I'll accept the promotion. Mr. Becerra, would you like to inquire?
Thank you, Mr. Chairman, and thank you to our panelists for their testimony. Superintendent Kaufman, let me ask, Congressman Doggett asked some questions about the treatment of women when it comes to health care, and I'd like to expand on that a bit. We know that some plans are making some substantial profits these days, while at the same time we have a number of consumers who can't afford to purchase health insurance, and many are being denied health insurance or being removed from their plan because they have allergies. We know that in many cases there has been an effort in the past years of this Congress, to remove oversight and regulatory responsibilities to oversee some of the insurance industry's activities in healthcare. And now we're beginning to see in the banking industry the results of some of the deregulation that occurred, the bailout of AIG, of the default of companies like Lehman Brothers, and now we're being told by the President that we must provide $700 billion to bail out Wall Street. What's your sense of the need to provide some responsible oversight and regulatory authority over the health insurance industry to make sure that consumers indeed are receiving what they believe they're paying for?
I don't think that the insurance industry can regulate itself. And I think there's an important role for state insurance regulators. And I ask that you do not take my authority away to protect the consumers living in my state, whether it's through health insurance or other congressional interventions. It is my job to make sure that companies stay solvent and claims get paid, and that there's a fair and predictable marketplace for companies to do business. Going back to your first point on discrimination against women, I just want to clarify that the problems I identified in my testimony are problems in the individual market. Many of those problems do not exist in the group market and the job-based market because Congress and the states have passed laws to protect women against discrimination. So I just wanted to clarify that. In many cases, you can't even buy, for instance, a maternity rider. In Maine, we don't require individual health insurance coverage to cover maternity. We have two carriers. One of the carriers voluntarily offers that coverage. The other one does not. Even if you wanted to pay $1 million for that rider, you couldn't buy it as a consumer. In the job-based market, especially for employers with more than 15 employees, that's not allowed. You have to cover maternity, and that's as a result of the federal laws that we have.
And is it the case that, especially with in the individual marketplace, that you do find some stark disparities between the costs of insuring a woman, all else being equal, and the cost of insuring a man? Two healthy 40-year-old individuals, one male, one female, in the same geographic area, trying to shop for an insurance policy as an individual could result in vast disparities in cost, usually a much higher cost for a woman than a man.
That's correct. Maine is one of 5 states where we do not allow disparities based on gender. You cannot be discriminated against because you are a woman. Our rates are allowed to be varied based on age and tobacco use and geographic location and occupation. But insurance companies are not allowed to base their rates on one's health needs or perceived needs or gender. But we're in the minority.
And it seems that when you talk about health care and you talk about a system where there has to be some coverage for the need to recoup some of the costs and make some profit, there will always be a desire on the part of the entity, whether an insurance company or a physician, to be able to make ends meet. So you have to have a little bit of a buffer at the end of the day, call it a profit, whatever you wish, to be able to offer services the next day. That differs, of course, from the federal government or any government-provided health care, where at the end of the day, that governmental entity, federal, state, is not looking to make a profit, and as a result, will cover the ill as well as the healthy at the same time. So a woman who's about to become pregnant or who is pregnant is not going to find herself facing some discriminatory policy from the federal government when it comes to receiving health insurance. Usually it's unfortunate that we're talking about a woman who's low income who receives that non-discriminatory treatment by the government. But it seems to me that there's a problem we have here in that the reason the government can be non-discriminatory is because it's not looking to make a profit. On the private sector side, if you want to make a profit, and I can understand the need to make a profit, you want to get the least ill, or in other words, the healthiest person to become a member of your plan. So if a woman who is 30 years of age and still childbearing age wishes to be insured versus a man who's 30 years of age and obviously can't bear children, that insurance company probably looks at the two and says, likelihood that the 30-year-old man is going to cost me less over the next 10 years than that childbearing age woman of 30 years of age as well.
Yeah, if men could only have kids.
Yeah. We might have had universal coverage quite some time ago, I suspect.
I think to your point of different incentives that exist when the private market provides coverage, it's certainly true in a for-profit world, and it's not a value judgment, it's just the reality.
Right.
Companies need to make profits, especially if they're publicly traded, they have responsibilities to the stockholders on Wall Street.
That's right.
And it's a different type of incentive than for government. Certainly when employers provide coverage to their workers, there's a built-in incentive to make sure the worker gets healthy as quickly as possible so he or she can return to work quickly. Well, I'm not sure that that same incentive exists in the individual market. It's a different type of incentive. Yeah. So that's another reason we should be very careful if we decide to walk away from the job-based coverage system we have currently.
I'm glad you distinguished that. We're not making value judgments here. It's the fact of life. If you're in the private sector, you have to survive, and that means you have to be able to make some profit at the end of the day. And so it's not that these industries are trying to shortchange Americans, it's that they have to exist for the next day. And so that's the difficulty we have, of course, is that we're talking about the health care or the life of someone in the future, and maybe that's not the best way to make value judgments. But, Mr. Chairman, I know my time has expired.
Thank you. We're going to have a vote in a few minutes, and I'd like to give as many people here. Mr. Pomeroy, would you like to inquire? And,
yeah, I would, Mr. Chairman. Thank you for this excellent hearing, and the panel has been superb. I'm trying to put this in the context of what we might see next year by way of a proposal from a new administration relative to health care. Dr. Feldman, have you had an opportunity to compare your view on how this ought to go with the positions of the respective candidates?
Yes, I have. I have not made these statements publicly before. In my comparison of the candidates' proposals, I think they would both be quite effective in reducing uninsurance, and they would both be quite expensive.
The proposals are quite different. What it seems to me, as I hear you saying, is the first thing we need to do is essentially dramatically change the tax support for employer-sponsored health insurance. Now, to me, is that more like the approach of Senator McCain as opposed to Senator Obama?
Yes, it is.
Now, you offered some statistics that I'm wrestling with. You think that those workers covered by employer-based health insurance are overinsured, and this rises the cost of health care?
Yes, I do, Mr. Congressman.
So in your view, if people were paying a lot more from their own pocketbook, then the prices would come down because people would be unable to afford those prices.
Okay. I would like to, first of all, to say that when we talk about the cost of employer-sponsored health insurance, ultimately all of it, whether it's paid by the employer on my behalf or whether I pay for it out of pocket, comes out of my productivity and out of my paycheck. This is a prediction from both economic theory and...
With time so short, we can't get into the theory part, but I mean, basically, you think overinsurance means someone else pays the bill, and that means you can charge more because the user of the service isn't paying the bill personally.
Yes, sir.
And so we get at cost by having people pay more out of their own pocket.
Yes, that's correct.
You would tax employees for the value of the health insurance they receive, right?
Yes, I would.
And is that similar to the McCain proposal?
It is.
I'm glad you clarified that, because I'm looking at something I pulled off the web page. McCain-Palin says straight talk on health system reform, and there's not a word about the new taxation on employees for the value of their health insurance benefit received. Indeed, what is the value of health insurance commonly provided? Do you know, Dr. Feldman?
In the testimony that I presented earlier, I mentioned that the value of the taxes for a single person was $1,753, and the value for a family was, I think, $3,800.
I'm just thinking about no, that's the value. That's not the question. How much more tax would they have to pay? And I'm just looking, for example, at the Blue Cross testimony, and you're estimating that the cost of coverage in a large group, which would be the most cost-effective insurance delivered, is $4,500 per year for a single worker, $12,000 for a family. So a worker in the marketplace with family coverage can expect to pay taxes on $12,000 more income. Is that correct?
It all depends on your position in the distribution of income. Low
I
income
know,
tax.
again, theory versus just how this thing works. In the terms of how it works part, if you're paying income taxes on the value of your coverage, and the average value of coverage is $12,000 a family, looks like I just got a $12,000 income figured into what I got to pay taxes on. Dr. Davis.
Congressman, if I could just comment, the Urban Institute Brookings Institution Tax Policy Center estimates that Senator McCain's proposal would increase taxes by $1.3 trillion over 10 years, and that's not covering the cost of the high-risk pools.
Now, I'm saying, in fairness to the McCain plan, it looks like he gets a tax credit, but the tax credit is $2,500 for individuals and $5,000 for families. Now, someone that is going to have to go shop for coverage, how far is that going to go to covering the coverage you're going to have to shop for? We might ask the expert, the guy that sells the insurance, Mr. Budakin.
Yeah, we think it'd be about 50% inadequate in terms of covering what they have to buy on the open market.
So
Mr. Congressman,
if the employer, I'm going to cite here from a survey, and then I see that my time has elapsed, Dr. Feldman. By all means, submit in writing, further elaboration. A survey conducted by the American Benefits Council cite 74% of employers responding that this changed tax treatment would have a strong negative impact on their workforce, and that some considerable portion of their workforce would actually find that coverage would then transition from the place of employment to the individual. And so people can be expecting to pay substantially more out-of-pocket dollars one way or another under the McCain plan. It's not reflected in the straight talk piece. It would seem like straight talk on these matters. We want to make note of that fact. I yield back, Mr. Chairman.
Thank you. Mr. Kind, would you like to inquire?
Thank you, Mr. Chairman. Just to follow along the line of questioning of Mr. Pomeroy, and the statistics that I'm looking at, if we're focused on the ranks of the uninsured in this country, there's a large percentage of people working in small businesses or family farms that are having a hard time getting coverage because it's too expensive. About 30% of the employees working in small businesses have to go without any type of health coverage because of the expense involved. And yet, getting back to what Mr. Pomeroy was alluding to, the average monthly premium for an employee in a small firm is roughly $379. That's roughly $4,553 in annual premiums. And then for family coverage, it comes to $11,835. Is that pretty close, Mr. Boddikin, the statistics that you're seeing? So the $2,500 and the $5,000 tax credit would be about half of really what we're seeing nationwide average premiums for individuals and family coverage today. Yeah, it's quite a gap in order to make up. I have been focused on, if you look at the 48 million uninsured in a given year, a lot of them working in small businesses or on family farms that can't afford coverage. How do we close that gap? Earlier this legislative session, I and Phil English and others introduced legislation called the SHOP Act. It would establish a national purchasing pool to give small businesses and family farmers a chance to join that. There are some tax incentives in order to offer coverage to it, and also some of the other barriers. But one of the other aspects involved in the legislation is seeing what we can do to try to begin harmonizing rules across state boundaries. We've got 50 different states with 50 different sets of regs, 50 different sets of mandates out there. How important would that be as far as establishing a pool for small businesses or family farmers to join in if we focus on just what's going on from state to state and then trying to harmonize those rules at some point? Does anyone have an opinion or a thought on?
I guess our thought is that, and perhaps similar to what was said earlier about state regulation, if we look at the overall regulation of the insurance market, the problems we have in the insurance market, at least in my opinion, are not primarily the result of inadequate state regulation. In fact, state regulators do a pretty good job on the whole. The problems are in the way the market has functioned, or should say allowed to function, and there's lots that can be done at the state level to fix that. And so, for example, we talked about maternity earlier. We actually proposed, along with another health insurer, that we require maternity in our individual policies. We don't think it's the right thing that maternity not be part of an individual policy. Ended up passing and vetoed by the governor. But that said, there are even insurers that believe that the coverage is too skinny and we ought to fix it. I don't think by putting it at the federal level that we necessarily solve those problems. And to the extent that we sell...
Yeah, I'm not talking about, federal preemption here, but I am talking about seeing what we can do to try to harmonize across state boundaries.
Yeah, and I
Mr.
guess
Feldman, do you have a...
The other suggestion that's been made is that we sell across state lines, and our concern there would be just to make sure that that there isn't a cherry picking of states with the least regulation and they aren't sufficiently solvent for a state like California.
Well, and our proposal is to have the Institute of Medicine take a look at this and see if we can come up with a basic benefit plan that would make sense. Mr. Feldman?
Mr. Congressman, number one, the tax exemption for self-employed people should be extended so that you can deduct as much of the tax as a person who gets ESI. Currently, that exemption is limited to the extent of your taxable income, and you can't apply it against your self-employment tax. Number two...
Yeah, and I have legislation that would get rid of that self-employed tax that would allow them to deduct their health insurance premiums. It's an anomaly in the code, and we should fix that.
It's just an anomaly. Number two, your pooling idea, I think, would have support from members of this panel. The state of Minnesota operates 2 insurance pools, one for high risks and one for people who are getting a state subsidy. And both of those pools run at administrative costs of around 5 to 6% per year. So that's a very good idea. Number 3, I would support allowing individuals to buy insurance across state lines.
Yeah, let me just make a quick observation, and if anyone wants to comment, you can. But I've noticed when you look at the comparative rate of the uninsured from state to state, and I'm not sure if there's a correlation, maybe you do see one, but those states with a relatively lower uninsured rate for their citizens also happen to be states that have less utilization yet higher quality of outcome. I'm talking about Minnesota, my state of Wisconsin, Iowa. Is there a correlation here where you're getting less utilization, higher quality of outcome? It just so happens in these states they're one of the lowest in federal reimbursement rates too, and yet they have some of the lowest uninsured rates in the entire nation compared to the rest of the states.
Absolutely. The Commonwealth Fund issued a state scorecard on health system performance, and there's a very high correlation between the extent to which the people were covered by insurance and the quality of care, whether people got preventive care, whether they had their chronic conditions controlled. So definitely there's a high payoff for states that have high rates of insurance coverage in terms of better health outcomes, better quality of care.
Great. Thank you.
Dr. McDermott, would you like to inquire?
Thank you, Mr. Chairman. I appreciate your having this hearing and letting me ask a question. The Veterans Administration negotiates prices, and I'm really talking to Mr. Bodakin because I think it was your testimony that talked about the woman who thought she had a health insurance coverage and wound up finding that her insurance only covered $1,500 of the 50. Was it your? Excuse me. Then I got the wrong person. But the issue here that strikes me is that the Veterans Administration negotiates down to 40% on pharmaceuticals. Only when the government steps in and regulates can you get savings. It seems to me that buying in the private insurance market is hopeless because the average person, this woman with her cancer treatments, has no way to negotiate or shop. She isn't going to go down to the pharmacy and say, I would like the cheap drug to stick into me for my cancer. She can't do that. And she has no way to drive down the price because she's by herself. And the insurance companies are never going to drive down the price. They're not going to buy for all their... So explain to me how you control costs in the private market, or do you not care, as long as you can shift it onto the person, the individual?
Well, with respect to whether we control costs, costs are certainly going up at a higher rate as a result of hospitals, physicians, pharmaceuticals, all kinds of things, some of which is legitimate, some of which isn't. The reality is we probably pay, on behalf of our subscribers, about 50% of what a private individual would pay without the discounts that we're able to negotiate. So it is pretty significant what we are able to negotiate on behalf of individuals. But I don't discount the fact that certainly Medicare is got clout that no individual insurer has in terms of negotiating drug prices, and perhaps in other areas we ought to take advantage of that. But in fact, we do a very good job, and I'd say the Blues nationally do a very good job of getting cost-effective rates, more cost-effective rates than any other health plan across the nation in terms of the negotiations we have with hospitals and physicians.
Ms. Kaufman, what's your experience with this? And you're running this insurance program in Maine. What's happening to people?
Well, I don't run the insurance program in Maine. I lead the insurance department, and we have oversight over insurance companies. I'm not convinced that insurance companies could effectively negotiate on behalf of the policyholders. I think it depends on the providers. If in Maine, for example, many of the hospital systems have gotten quite large, and they've purchased physician groups. So about half of the physician groups are now are owned by a hospital system.
So doctors are working for salaries rather than on a fee-for-service or performance production basis?
There are different arrangements, but essentially the hospital system negotiates on the behalf of the doctors that are in the system, and the salary structures vary.
How big does the system have to be? I mean, we prohibited Medicare with 45 million people from negotiating, but how big does a hospital have to be able to drive the prices down by that kind of negotiation?
Well, the carriers negotiate with the hospitals, and if the hospital system is quite large, and there's only one hospital system in the area, then it's kind of hard to negotiate because you only have one player you're negotiating with. So I think it's a challenge for the private carriers to negotiate a huge savings when there's only one party to negotiate with. I think looking at the whole system-wide, there are opportunities to save money, whether it's looking at the fee structure, looking at how we spend new technologies, new MRI machines. Why do you need 5 of those in a particular setting when the community is small, for example? Looking at the drug prices, why they've been going up. Looking at how we use medical care. When do we access medical care? Is it in a timely fashion where we can get to the problem early before it costs a whole lot of money? There are lots of opportunities to do that, and I certainly would agree that the government has been quite successful at looking at some of those opportunities and achieving cost savings like what the VA does.
Absent a global budget, it seems like it's an open-ended thing that's going on today. Being a physician, I know about the California Relative Value Scale, and I lived with it for 20 years when I practiced medicine, so I know how physicians ratchet prices up. And the pharmaceutical companies seem to be doing the same thing, and the device companies are doing the same thing at much higher than the actual rate of inflation in the rest of the economy. So I find it very difficult to see how the private market can ever do for the individual what a government-regulated system, and I know government regulation is in talk these days since we've been watching the banks, but there does need to be some way, it seems to me, to put that on top. I yield back the balance of my time.
Thank you, and I want to thank our witnesses. I would like to have you be comfortable if members, and I'm sure we all will think of something we wish we'd asked this morning, if we could write to you sometime for your input on questions that will occur to us or that our staffs will remind us that we forgot to ask. it would be appreciated. You'll make us look a lot smarter if we can impose on you. Thank you for your testimony this morning, and the hearing's adjourned.